Today, crypto markets brace for higher interest rates. A new bill from Congress wants to ban algorithmic stablecoins for 2 years. And Twitch bans crypto gambling after public backlash. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Digital currencies are mixed again this morning. By noon Eastern, Bitcoin rose to $19,000 while Ether fell to $1,300. Meanwhile, Avalanche's AVAX token dipped to $16. Okay, let's talk about the top stories. First, draft legislation in the U.S. House of Representatives would place a 2-year ban on new algorithmic stablecoins similar to Terra USD, which collapsed this year and caused chaos in crypto markets. According to Bloomberg, the bill would criminalize the creation or issuance of stablecoins pegged to other digital assets, like Terra's failed UST token. The draft bill also mandates that the U.S. Treasury launch a study on algorithmic stablecoins and coordinate with the SEC and the Fed, as well as other agencies. This comes 4 months after the collapse of Terra's stablecoin UST and its sister token Luna. The controversial algorithmic stablecoin was supposed to track the U.S. dollar, but decoupled from that target price, triggering a huge crypto crash and placed more scrutiny on stablecoins. The panel could reportedly vote on this bill as early as next week. Next, live streaming service Twitch announced it will soon ban crypto gambling. According to Bloomberg, this comes after backlash against recent multi-million-dollar sponsorship deals with Twitch personalities. A tweet from the company last night said that some of the live streaming gambling sites that will be banned include Stake.com and Rollbit, which, quote, aren't licensed either in the U.S. or other jurisdictions that provide sufficient consumer protection. Twitch says it will continue to allow websites that focus on sports betting, fantasy sports, and poker. The new rules take effect on October 18th. Finally, Canadian authorities just seized several luxury cars from a self-described crypto king. The CBC reported yesterday that 23-year-old Aiden Platursky and his company allegedly owe $35 million to more than 140 investors. His 2 BMWs, a Lamborghini, as well as 2 McLarens make up some of the $2 million worth of assets seized in Ontario, Canada. Before the seizure, Platursky reportedly lived a lavish lifestyle, owning more than 10 vehicles, leasing 4 others, flying on private jets, and paying $45,000 a month to rent a lakefront mansion in Ontario. We reached out to Platursky's attorney, and as of noon, we hadn't heard back yet. However, CBC reported that Platursky's lawyer told the outlet that his client disputes many of the claims against him and believes they are wildly exaggerated. All right, on to our main story. Let's talk about markets after the Fed raised interest rates this afternoon. Crypto World's Mackenzie Segallo spoke to Anthony Georgiades of Pastel Network about what economic pressures lie ahead for crypto.
So we have the Fed releasing minutes. What are you expecting to see in the crypto markets?
Yeah, definitely. I mean, look, as we've seen over the last 3 to 6, 9 months through 2022, effectively, crypto's been ultra sensitive to moves in the broader equities and asset markets themselves. So we've seen risk markets really continuing this downward trend. I think a lot of it's dependent on, is the Fed going to hike by 75 basis points? The market's baking in a probability of 20% chance that they actually hike a full 100 bips. And it's pretty interesting, right? Because on one side of the spectrum, the Fed can say they're ripping off the Band-Aid, they're solving inflation, and potentially moving towards a very much so tightening period where they get inflation under the curve and can actually then move back into a potentially easing policy into 23 and 24. So crypto is going to be ultra sensitive to moves in the broader equity markets, moves in the broader bond markets, etc. So I definitely think from an investor standpoint, if the Fed does hike above 75 bips, I think a lot of that tightening might continue to push more downward pressure on the broader crypto markets. That being said, if the Fed continues its course of 75 bips, it's probably one of those things where the market's adequately priced in this path already, and potentially the worst is behind us in the short term at least.
So cryptocurrencies like Bitcoin were billed as this inflation hedge. That hasn't borne out yet. Are we ever going to see that be the case where you've got cryptocurrencies like Bitcoin or Ether bucking larger macroeconomic events?
Just because crypto hasn't behaved like an inflation hedge historically, it's been the child of a very much so debt-based global market where interest rates have been extremely low. It's been easy to speculate on cryptocurrencies, digital assets like Bitcoin, like Ethereum, like NFTs. And just because it hasn't necessarily played out as an inflation hedge in the past doesn't mean it won't break that correlation at some point in the near future. And I do think that what's going on from both a monetary policy and federal policy basis on a global scale is starting to get sovereign nations, institutions, pensions, etc., to really rethink the underlying intrinsic value of money and the underlying intrinsic principles of the existing global monetary regime that we have today. So I do think that everything that's happening now is really setting up the cryptocurrency market for mass success over the next decade plus, where you actually do have money such as Bitcoin, where there is only ever going to be 21 million Bitcoin ever in creation. That still stands true 12 years later since its creation. And I think that all these different factors go hand in hand. We will start to see that thesis play out over time.
So you mentioned NFTs. Is that market coming back? Are we going to see liquidity return at any point in the next 6 to 12 months?
What's important to remember about NFTs is by their nature, they're very scarce, meaning that there tends to be a lot less quote unquote liquidity for any specific NFT collection, any specific NFT drop or whatever it might be. And on the flip side, NFTs were also born and saw probably the height of their dominance, adoption, speculation at really the top of the quote unquote last cycle that we went through. So naturally speaking, they were very, very much so a product of a lot of success during this period of irrational exuberance, hyper speculation, and they've borne the brunt of a lot of the quote unquote downturn and correction in terms of overall price pressure. So I do think that as the market stabilizes and as more mainstream and mass scale, whether it's enterprises, whether it's travel and entertainment or hospitality, but various use cases that really pave the way towards what NFTs are meant to be, we'll see less of that speculation and more of that actual mainstream adoption.
So last week, Ethereum underwent this historic upgrade. Following that, we saw that dynamic of sell the news. The price of the Ether token, which is the token native to the Ethereum blockchain, plummet in price. So where are we now, and where do you think we're headed in terms of pricing with Ether?
For many people in the Web3 community, the merge is potentially the second biggest marquee point in the history of crypto. Second to obviously the release of Bitcoin itself, just marking this amazing merge that went so smoothly. And again, they took many, many years and thousands of different potential paths of how they would actually go down this pathway of proof of stake in a true decentralized fashion. And it's finally here, right? And I think to your point, it was a lot of buy the rumor, sell the news. A lot of it had to do with the fact that people were potentially speculating on acquiring Ether up to the snapshot with the idea of getting airdropped Ethereum proof of work tokens or whatever it might be. And obviously, I think it also kind of lends light to the fact that at the end of the day, Ethereum is still a very, very, very small asset on the global grand scheme of things when you're talking about trillions of dollars of fiscal stimulus, monetary stimulus, whatever it might be, that's been pumped into the economy. But I do think that over time, there will be a lot more mainstream adoption into the Ethereum ecosystem. And as you mentioned, some of the deflationary mechanics that come from proof of stake, actually staking coins, the ability to actually take locked value on the network itself, but then also the transaction volume that might lend itself to an increase in overall quote unquote token burn, taking token supply out of the actual market, which you can kind of almost equate to a share buyback of sorts.
Russia has escalated tensions in its war on Ukraine. What kind of impact do you think we can see on the crypto markets? We definitely saw movement in prices earlier this year when the conflict first began.
There's certainly two sides to it. There's the side that obviously a heightened quote unquote tension and war in Ukraine might result in elevated prices in terms of both commodities and energy. So you might have a prolonged inflationary impact, meaning that on a global basis, maybe there's going to be more tightening to combat that inflation. And maybe there'll be less money to fundamentally speculate on really high growth speculative assets. So that could continue to cause some downward pressure just in terms of the speculative price component of crypto itself. On the flip side of the spectrum, you might actually see fundamental true adoption of crypto itself. We have a couple companies based in Ukraine or developers based in Ukraine where we're actually finding that the only way we can fundamentally pay them in a quick and efficient manner is through crypto and is through digital assets. So I do think that on the flip side, the continued heightened tensions in Eastern Europe are going to result in potentially more adoption from a day-to-day use case of cryptocurrencies themselves.
Okay, that's all for Crypto World today, but we'll be back again tomorrow, so we'll see you then.